Welcome to TradeTheMBI.com. This is John's report is for the 10th of March, and we are approaching the Ides of March. And guess what? Overnight, everything got better because the supply chains, the disruption to the economies now were all ended because we're going to get another tax cut. So that certainly is going to completely restore the market and everything else because nobody is going to lose their job through the drop in economic activity or even the displacement of oil and all the oil working individuals that go with that. So who knew? No, I'm just kidding you. But this always happens within a major downturn. I mean, I remember even in 2008, we had days that were up just as dramatic as the decline days, and it's completely normal. Now, in this case, 27.35 range, we had this from, way back. It's still valid. You'll note we did do exactly what we talked about. Remember this dip right here below the red line? So we knew that once these started going across that we were going to be revisiting that. That was the expectation. It was just a matter of waiting for the catalyst signal of that. In this particular case, we got to the extreme part of cyan, and once it started to come down, the spider literally kicked it off. We kind of saw it before even the daily triggered it because it was showing up on 5K and the 50K charts much earlier. And here you go, likewise with the NASDAQ. And now this is something that I even pointed out yesterday on our Skype chat that happened live. When you break these lows like this, the often reaction for that is to come back up to test them and you try and break back past through them. This is doing pretty good. This will be a complete turnaround on it. Now, are we pretty certain that there was some government involvement, i.e., or the Fed pumping, massive amounts of liquidity and who knows, even making purchases? Yes. So, hey, but that is the reality of it. So, I don't whine about that. It's just we were able to see the turnaround in the market came late in the day, and you go with it. And with that, obviously, the euro. Oh, the euro, that's so fun. I mean, this thing is, Italy, just so you're all aware, last night, late, full lockdown. So all regions, even though in our area, absolutely no issues and no virus outbreak at all. In fact, everything is pretty much normal. This now is saying you can't even go out or do anything without proof that it's necessary or you could be arrested. So maybe that's coming to a neighborhood near you, kind of unusual, but the death rate here has been through the roof, staggering, and their hospitals are reaching capacity in the north and that. So this is really ultimately what the problem was, and the whole intention of even the U.S. was just to slow the outbreak. And I think enough people potentially are concerned that they're going to avoid movements in that, and that could have the desired effect of mitigating the transmission. So we'll see how that works out. Public awareness can do a lot to stem this kind of situation. So euro, yeah, okay, not all that excited about it, but this, big problem. Oil. This is going to have systemic deflationary issues, macro, not to mention the supply disruption. Just because you have cheap oil, if nobody's going anywhere doing anything, yeah, you've got a real issue. Now, my suggestion was that the U.S. government go ahead and buy up supply for the strategic reserve, and that would help bolster and defeat the Saudi-Russian combination here to destroy shale producers. But whether they're picking up on that or sharp enough to grasp it, anybody's guess. Gold, well, it's going to continue. Just increase that chart. I had that shrunk for you because we knew that there was that build up from way back when we saw that everything starting to build towards central governments buying up gold, as well as individuals preparing for an eventual inflationary boom because the market kept discounting the fact that the dollar was going to be devalued, and that is part and parcel to why the market goes up as well. And some people don't seem to get that the devaluation of the dollar, the market isn't going to suffer that, and so the multiple increases to compensate, and the market goes up even in stagnant or not necessarily worthwhile justification for its value in some people's minds. So intraday was fun. We were doing all sorts of things. We were just going play by play. Once we had the initial decline coming through, we had little situations like this that were kind of fun, where we would get a positive extreme on a turnaround move, but we knew it was happening without a DOC steel reset, meaning the steel dipping below red. Now, in this particular case, we got the buy that was right at the 23%. Before that, though, the sell was critical, because here you have gold rising from a shakeout standpoint. And when that happens and you're below the 50%, particularly if you're below the 23%, it's usually time to revisit the lows, if not make a new low. And that's exactly what it did in this particular case. But what was interesting about it is once the move started, we ended up with a positive extreme. So I like 80% of those to retest the lows. And this one did a beautiful job just as the DOC spread came in, follow it right down to it. And what I pointed out was that this will often happen and you still maintain a bull move, which then immediately after saying that, it shot up and went to the highs of the declining Morganachi. And that's the thing you look for when you're seeing these declining highs of the Morganachi, is that price wants to rise up to it. Then we ended up with a little bit of muck going through until later on, and then we ended up with some cleaner signals as we ended up with lower shakeout readings here, and then clean DOC spread on a complete reset. So this was fully reset, and then what happens is as it starts to go across, breaks down, it doesn't have that dip of orange. That orange just got to come down there to really give it this kind of impetus. That's what gives you these nice multiple candles going through, because it represents that relationship between buyers and sellers and who's winning it. And when it's declining like that, you've got a positive push, and when it's rising, not so much. And in this particular case, when it went flat, no interest, and that led to a beautiful decline. It was rather luscious. Then at the end of the day, we got late buyers jumping in with the big spike of the orange coming down. Now we knew we were deep in here, so in that particular case, you're expecting that we're going to retrace this. Why? Oh, yeah, because here you go, you get your dotted line, dip below the red line, piece of cake. As soon as the sell came in, it's like attack that baby, and boom, we dipped lower. And then P2 pivot, setup construct here, higher DOC red, and the perfect combination where you've had the steel cross, orange dips below, green over red, and red moving into a new zone, and right at various outlets. So whether it was the 2017 or the 2729, either one of them, and then boy, they took advantage of the low volume. Look at this run, filled it all back in, because you have these big ranges between the next algo resistances, because as soon as you hit them, boom, we've come up to them. Now, I was playing with this other program that I've been working with to establish these criteria for no reset of the DOC steel, which will allow us to not have some of the little intermediate green moves that take place within this, and we'll be able to follow a little bit. I'm going to be incorporating it into that DealCon Paint too. You won't see any of the numbers. All it is it's counting from that initial crossover period, and then it's recognizing that, hey, at that point I want to start using DOC steel crossing cyan as my trigger points. And that's literally what we're looking for when we get into an extended run of this. And what I had the marker at is about 15 bars. It will vary depending on chart, and it'll become a variable input that you'll be able to make adjustments to. But you can see will capture each of those. Now, when we look at our other 5K from the Diocon paint, that's pretty much solid green going all the way through. So this is where the trend following nature of the Diocon paint in this kind of positive shakeout move is pretty strong, because what happens is when you do have DOC steel resets like this, and your cyan under red obviously is still always a buy, you're not going to be recognizing major decay, because you've got full reset here. Because even when you have this DOC spread that takes place right here, you're already coming from a negative 13.5. So as soon as it gets above negative 13.5, that's the equivalent of it having, because when you go below negative 13.5, it's equivalent of it being up from above. Once it moved up back above negative 13.5, that's your signal that, hey, this is about to take off. And sure enough, that's exactly where it happened. So you could follow this along in quite a few places. Here it was a little bit less so, because it had just triggered in the DOC spread, and then boom, in this particular case it was the cross of the red. I typically will wait for that cross of the red, or at least an uplift of the green. Fine, I don't care if I'm a little teeny bit late on it, at least I'm going to get a little bit more from it. Now, you'll also note though that you didn't get a orange dip below. That's okay, because you're following that shakeout turnaround that hasn't dipped below the red line. And in this case, when it did, you ended up getting the green over cyan even before you got the complete orange dip. So that's still just good enough. And also the shakeout had turned around at that point. Now, it's interestingly enough, we had the dip below the red line, but it made a lower low on the higher extreme. That's also a telltale sign. Always pay attention to that, because when you're making a lower low on higher extreme histogram after being below the red line, that means that you've got new buyers, so there's a divergence taking place in there. So that's a good key to pay attention to when you see this kind of setups, because even like right here, we had these first two bars right there, and then boom, came across, matched it on a much higher green line. And when the green comes in, those are usually the beginnings of nice power moves. In fact, when you dipped on this one, you didn't even go to red, it just turned around. Plus this one had rising gold, so that's above 50%, that's asking for you to go to the 100%. So that's kind of your expectation. So we're up 122 or 4.5%, because they're talking about a tax cut. So will that be sustainable? It depends on infection rates and what the real numbers start coming in at for the displacement of the supply chain. And so out of the woods because of this? No. So it looks good today, but I think we're going to see a lot of intermediary action. And certainly for now, though, we go with what is, which is bullish. And we'll see when the actual market opens and participants, how desperate they are to either get out or add into it, because you certainly want to be buying into a market where you have so many unknowns, because it just makes a lot of sense. I guess that was being facetious, but that's okay. It doesn't mean that people won't buy it. So this is my whole point. We got to go with what the readings are. And the reality is, it's not what the masses are going to do. This is what the big money is doing. And if the government is supplying that money to them to buy, then the market's going to rise. So plain and simple, we go with where the indicators take us. And right now we're seeing a little BK action, DOC spread starting, but with steel below, probably not going to dip much. This is going to come back to at least the long. I have the long and short algo test on here as opposed to the ABMs, because I was working with the ABMs to adjust to our other paint models so that they reset to match them as opposed to the original Diocon paint. So just FYI there. Long video, let you go. As always, trade well. We'll talk to you later on Skype chat.